Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we will detail everything that's going on in the macroeconomy to help you make more informed home buying decisions. Feels like it's been a little bit since we've talked, but don't worry, it's not you, it's me. But we are back on track for doing weekly update videos, all right? The 30-year fix is sitting at a 6.86, which is up about 5 basis points from last week's 6.81. We had some good news over the weekend, which are definitely helping the rates. It looks like there was I believe a 90-day pause on some of the tariffs with Europe that were announced, I want to say Sunday. So good news in the economy. It looks like that is helping the mortgage interest rates to be soothed a little bit, coming down. We don't have a huge week this week, but we do have one very important piece of economic data that is coming up, and I will go over that in the charts. So let's get on over and we can look at that now. It looks like rates did spike up, and we see that on May 22nd, according to the 10-year, rates were spiking a little bit and getting out of this little range that it was stuck in. However, rates have since come back down. So in the intro, I said that the 30-year was sitting at, I want to say 6.86. And that is because at the end of last week, we saw that there was a couple things that happened. So tariffs were put on place to the EU, I believe. I want to say it was like 50% tariffs, and wasn't great. I want to say that the bond market probably didn't respond well to that. We also saw a downgrade in the U.S.'s credit rating from AAA, and then Moody's downgraded it to AA+. And that was causing some turmoil in the bond market. However, since then, I believe that there was a pause placed on the tariffs. I want to say a 90-day pause. So, with tariffs, it's like they're on, they're off, they're a negotiation tactic. They're not. The market is probably getting a little wiser to this, and that's why it wasn't so overblown like back here, where it was like crazy volatility. So we did see volatility in the 10-year. However, it looks like it has subsided, and things are kind of backing down into this range where they have been. So I would expect that the 30-year fixed rate would probably be sitting at like a 6.81, probably in that lower 6.8s when we check next week and see what it was for this week. When we look at the bond market, like I said, the bond market responded negatively, and it looks like there was a sell-off. And then Monday, when it was announced that there was a pause on the tariffs, people were buying back into the bond market. So that is what's going on with the 10-year. Let's see what's been going on in the economy. So last week, we didn't have anything crazy last week. Nothing really that we wanted to pay too much attention to as far as, what we look at. There is this flash manufacturing side of things, and this is the PMI, which is Purchasing Managers Index. And let's see, index based on surveyed purchasing managers in the manufacturing. And it looks like it was solid. So this was a good sign. Above 50 indicates industry expansion. So it looks like things are growing still on the manufacturing side of things. Unemployment claims, they actually came in lower than the previous months and lower than the forecast. And when we look at existing home sales, had a little bit of a decline from 4.2 million to 4 million for this month. However, the estimate was 4.15 million. When we look at new home sales, they jumped up considerably from 670 to 743, and those are in the thousands as far as the units go. So 743,000 units were for the new homes sold. So that is good on the housing front. All right. Let's see. This week we had, as far as what is going on for us, this consumer confidence was good. This was on Tuesday. And this is surveyed households of confidence in the overall economy. So it was fairly solid, better than last month's, and then much better than the forecast too. So it looks like people are a little bit more optimistic about the economy. And then when we look at, let's see, so today is Wednesday. Thursday, we're going to have pending home sales, which that'll be interesting to look at. Forecast of negative 0.9%, and last month it was an increase of 6.1%, so we want to keep our eye on that. We also want to see this PCE price index, and this is the one component that I said was going to be fairly interesting. So PCE is the let's see. So it's essentially an inflation index, and this is what the Fed likes to use over the CPI, which is we saw a couple weeks back, and the CPI was better than expected, I believe, which suggested that inflation wasn't growing as high. So now we want to see where this PCE index lands month over month to see, this is what the Fed likes to use to track inflation. So it'll be interesting to see what this is looking like, to see, is inflation getting out of hand, or is it doable? Are things looking okay? Let's see. We also have, it's interesting to look at personal spending. Are people still spending money? According to that survey of consumer confidence, it looked like people were fairly confident in the economy. So let's see if their actions match their words. We also have the revised consumer sentiment and the revised inflation expectations. We already had the preliminary, which usually more important than the revised. So this might be interesting to look at, but not anything crazy. Like I said, the 30-year sitting at a 6.86 as of May 22nd. However, I think that's going to come down probably back into this either 6.81 or 6.76, somewhere in this range, whenever we look at next week's numbers. That's really all that we have for you. So if you guys have any home purchasing questions, if you are looking into refinancing, give us a call at 877-TEAM-MBL or visit us at mortgagesbylinda.com. All right, have a great week. Bye.